Ladies and gentlemen, boys and girls, it's that time again. You're watching another episode of Engine Room, a podcast brought to you by tokenmetrics.com. My name is Dylan Love. I'm joined as always by Bill Noble and Jacob Koch Gallup. We are here to help you make money in crypto. And one of the ways we do that is we help you sort signal from noise in the very noisy crypto news cycle. Speaking of noisy crypto news cycle, ladies and gentlemen, we are in the aftermath of a crash. If you haven't checked your crypto portfolio in a few days, you might want to hold off for a little while longer. There's probably not going to be any good news to greet you there. A lot of the color red, perhaps. Bill, Jacob, I broadly understand that the main reason we going through this crash lately has a lot to do with this new Omicron variant of COVID, which is probably not the biggest deal, but at any rate, the market is saying that it is. Is that the main reason we're down? Is there other stuff going on?
Yeah, I think there's two problems, right? There's a Federal Reserve on kind of the warpath, meaning, the inflation situation has become an embarrassment. Joe Biden reappointed Jerome Powell, most likely with the understanding that they would do something about inflation. That means probably tough talk and less printing press. And then if you add virus uncertainty on top of that, for markets, uncertainty is like Drano, right? It's just poison. So the market portfolio managers, particularly in legacy, so follow me here, right? Crypto just isn't a bunch of like techno nerds anymore. Like big legacy institutions own crypto, right? And they may have said on Friday, oh my God, I'm not going to have Bitcoin ruining my holiday or equities. So I'm just going to hedge. I'm going to sell or raise cash or whatever. And then, the little crypto market is like, oh my God, these huge behemoths just unloaded. And that's how you get these type of events. Yes, it's good institutions are involved, but it's not good when you get unloaded on, especially when you have the Fed and Omicron coming kind of out of nowhere.
Jacob, any thoughts there, Jacob?
Yeah, well, I more of a question for Bill. I'm looking at the at Coin Market Cap, and I see Bitcoin's down 16% over the past 7 days, and Ethereum's only down 6%. And
Right.
We're noticing that Bitcoin was hit a lot harder than Ethereum and some other layer one networks. I guess, what's the reasoning behind this?
This is a good question, right? Bitcoin isn't just crypto anymore. It's over-owned. So it's going to be subject to selling pressure, like I said before. Now, ETH, if ETH is the currency of culture and people are trying to move from Bitcoin and literally park money somewhere, like NFTs, check the floor price of CryptoPunks, Bored Apes, trading volume in sandbox land, right? ETH is being put to work as a way to kind of get away from what could happen in Bitcoin and equities. All right. So for the moment, people think they're safe in ETH. I think ETH is okay, but I don't want to over bloviate. So that's what's happened short term.
Yeah, I think another aspect of it too is you mentioned all the institutions, major institutions with billions of dollars in Bitcoin. And I think it's probably only in Bitcoin. I doubt they also own Ethereum if they're a very old school institution. So if they're hedging, like you said, then that could be another reason why Bitcoin's getting hit a lot harder than Ethereum.
Cool. Well, Bill, you brought up the classic phrase printing press, referring to money, of course, and that kind of dovetails with an unflattering news item, to be honest. We've got the major stablecoin company called Tether. Yesterday is singing the same song it's sung a few times in the past, just kind of making money appear out of nowhere. This time it happened to the tune of $1.5 billion, not bad for a day's work. But there's a Financial Times article that pegs the total cash backing of the Tether stablecoin at just 2.9%. Now, I hope we can kind of raise kind of a warning flag here. 2.9% means it could become difficult to get out of Tether in the future. That is to say, if you're trading well and you cash out your mixed bag of crypto and you want to, spend a little bit of that, buy a car, pay your rent, whatever it may be, there may come a time where that might not happen so easily with Tether, especially if it's just backed by just 2.9%. Of course, the rest of that backing comes from debt, commercial paper in China, other weird esoteric financial instruments. To whatever extent we can do a service to the people listening to this podcast, I hope that we could talk for just a little bit about Tether's making money out of nowhere. They've done it a bunch in the past, and they seem to be allowed to continue doing it. Is Tether just taking its cues from the U.S. government right now? What's going on, guys? How do we think about Tether right now?
Well, I think the first short, quick thing is in crypto, normally when crypto does FUD, they do it all at once. So Omicron, the Fed, Tether, all the FUD kind of comes out like 3 days or so, we hope. Right. I don't think Tether's taking its cue from the U.S. government and printing it. I'm actually a little worried that they're taking their cue from like Lehman Brothers, and they're out there buying securities with high yield. I kind of hope some of it's not Evergrande. That would be the worst headline if there was a default on some of the paper that they owned, right? It's not a problem until it is. So Tether FUD's not new, but there are always things to be cognizant of, and risk management also applies to stable coins.
Right on.
Yeah, I was gonna say the one thing that's making me nervous about Tether is Evergrande ties, because we're seeing that they defaulted and then they kind of came back from it, and they're probably gonna default again. And if they actually fully go under, there's a high chance that Tether owns Evergrande commercial.
Yeah. If anybody's curious about this particular little wrinkle in the Tether story, be sure to check out the Token Metrics blog on tokenmetrics.com, because we wrote a pretty in-depth little bit of research about how Evergrande unpleasantness, the threat of Evergrande default could actually be very disastrous for crypto by being some kind of knockout punch for Tether. And Tether is, of course, people love to impugn it by calling it the poker chip of crypto. It's how you cash out your gains and eventually move money into your bank account. If and when there comes a time where you can't easily do that, then there's going to be some dominoes that fall all around crypto and legacy markets even. So want to raise a flag there, guys. 2.9% backing of 2.9% cash backing of Tether is not a good sign. That's not the number we want to see. I don't think we need to see 100, but we need to see more than 2.9%. Another company in crypto is kind of earning some negative attention lately. Right before we're speaking to you on a Monday, of course, but right before we got into this past weekend, 1inch increased its circulating supply of coins from 181 million to 395 million. And the chatter on the internet is that they did this without a lot of notice, and they did it all at once. The company has ended up issuing a statement that this was all part of a token unlock event that people probably just forgot about. But at any rate, it bears mentioning 1inch is a major company. People are paying a lot of attention to it, and they're talking about something that happened without a lot of notice. The company says it did have a lot of notice. So I don't know. Do we have any theories about what might be going on here? Was this a legitimate event on the calendar that people just forgot about, or are people taking the opportunity to squeeze some gains a little higher, get a little more money out of this company that just raised a Series B round of all things?
Yeah, I mean, I'm not sure I buy into the oops, we just sold a whole bunch of tokens and wrecked the market. Okay. I think there is probably some legitimate concern that, it's the whole crypto game is near end of cycle. I mean, people who have been in this game know it's like 2 to 3 years on the upside, and then you have to cash out, or that's how it's been. So if you have altcoins rolling over and the Fed on the warpath and they were able to unlock tokens, well, they unlocked tokens. I mean, the thing about crypto, and it is good that it's a free market, but one thing you have to remember about free markets, especially going back in like the 70s and the 80s, is that, you you have to be careful as a small player. Big players do unload on the little guy every now and again. So
yeah, everybody's gain is somebody else's loss, and sometimes it's the little guy. Oftentimes it's the little guy.
Right. Especially
Anyway,
since they just pumped 1 inch to like $7, and then that was like recent.
Yeah. That would have been a nice time to be holding. Anyway, moving right along, we got to talk about this weird pending clash that I detect in the U.S. government as it pertains to Bitcoin mining. Let's talk about a guy named Whit Gibbs. Whit Gibbs is the CEO of Compass Mining. He's a cryptocurrency expert, and furthermore, he is a White House advisor. And the word on the street right now, I'm reading dailycoin.com, is that the Joe Biden administration has been mining Bitcoin. Now, this commentary is coming from a guy who runs a Bitcoin company and advises the White House, and he's kind of giving a wink, wink, nudge, nudge. I can't talk about it, but this is happening. That's kind of the spirit of this commentary. But Mr. Gibbs told Anthony Pompliano that the government can have 10 to 20 watts running somewhere in the Midwest to test it, maybe, hypothetically speaking. So, he's kind of smiling as he says this, and of course it's theoretically a matter of national security at the same time. So that's kind of the big news item there for crypto bulls to latch on to, is that the Joe Biden presidency is experimenting with Bitcoin mining. We got to keep in mind at the same time, Elizabeth Warren is emerging as quite the Bitcoin mining opponent. She's lobbied against a Bitcoin mining company in New York, all on the premise of this hastens climate change. Bitcoin mining isn't environmentally friendly. Bill, Jacob, what do we make of two people at the top of the United States power structure taking fundamentally different approaches with something like Bitcoin mining?
I think.
All right, go ahead.
I'll keep it short. Honestly, I think neither the Joe Biden presidency or Elizabeth Warren really know that much about crypto, if I'm going to be honest. And we're going to keep seeing clashes like this in all levels of government. And I think once there's clear regulations from the SEC, then we'll see kind of a clearer picture of the future of crypto in the United States. But as of right now, it's anyone can really say whatever they want.
What do you think?
When it comes to this, there are a couple points, right? So it's not really the Joe Biden administration that's doing Bitcoin mining. Probably, it's probably what I would call the executive branch of the government, which also could include things like national defense, intelligence. So it just seems common sense to me that if cryptocurrency is legal tender in certain parts of the world, that we would want to have some on hand if we don't already. Mm-hmm. It seems common sense. Now, even though I think Bitcoin can be subject to selling pressure. So, I mean, if you're watching this a month from now, hopefully all that's passed. But this whole idea of, Bitcoin mining is bad for the environment, or Bitcoin mining somehow is, upsetting civilization, or any of these claims. It's like, look, we output energy on so many other things, coal, everything that energy is used for doesn't necessarily promote human freedom. And even though Bitcoin may go up or down and, could go to 70 or it could go to 25, that doesn't matter. What matters is the symbol, right? The symbol of, we don't want something to happen the way it happened in Turkey, or we don't want to be put in an internment camp in a country that's having difficulty with COVID, right? So Bitcoin can be both money and an important symbol, for people out there who are on the wrong end of government mistakes.
Yeah, that Turkey talking point is a pretty compelling one right now. I mean, before we started recording, Bill, you shared a picture of a girl collecting bottles in the street, and just basically, it's a high functioning poverty state now. Is that too far? Is that too far of a characterization? High functioning poverty state in Turkey because inflation is above 84% per year. So
Yeah,
people are just slowly watching, the Turkish people are slowly watching their currency become less and less valuable, the same amount of money buying less and less stuff. So yeah, I hear you. If you're going to spend energy, if you have to damage the environment, why not do it in the name of something that unlocks economic freedom, that economically empowers people no matter where they are, no matter what color they are, no matter what they think, believe, or do? It's just there. I don't know. I think we can end it on that nice little on that nice little note. Guys, the name of this show is Engine Room. We are a podcast coming at you 3 days a week to analyze the crypto markets and help you make money in cryptocurrency. If you got any value out of watching this, if you got any value out of listening to this on your headphones, please be sure to give this video a like on our YouTube channel. Subscribe to Token Metrics on YouTube, and we will see you next time.